So Tesla just reported their earnings call, but what's very important is what they said. So first of all, he said Chinese automakers are the most competitive car companies, says Elon Musk. So this is an excellent article that I'm going to read to you guys. Tesla chief executive Elon Musk said Chinese automakers are the most competitive in the world and will have significant success outside of their country. Frankly, if there are not trade barriers established, they will pretty much demolish most other car companies in the world, Musk said. They are extremely good. Chinese automakers are looking to expand in Europe and other parts of the world. The U.S. largely shuts out Chinese imports with prohibitive tariffs, while European Union regulators in September unveiled an anti-subsidy probe centered on low-cost electric vehicles from the country. Beijing has denounced the EU's investigation as protectionist. We don't see an obvious opportunity to partner with the Chinese automakers, Musk said, except by giving them access to Tesla's supercharger network or licensing its self-driving technology. Now, what's really interesting is that Tesla warned of notably slower growth in 2024, and its profit margin took a hit in the fourth quarter, signaling more uncertainty ahead for the world's most valuable automaker and the broader electric vehicle industry. Tesla cautioned that their growth is likely to come in lower in 2024 than it did last year, without specifying a target. In 2023, its global vehicle deliveries increased 38% over the prior year, and for several years, Tesla had been aiming for 50% annual growth on average. The company's more subdued forecast is a sharp reversal from a couple of years ago when demand seemed limitless and profitability was robust. Now, Tesla is confronting softening demand, shrinking margins, and intensifying competition from rival electric vehicle makers. Tesla stock was down roughly 5% in after-hours trading Wednesday following the release of financial results. Shares have fallen some 16% this year through Wednesday when they closed at 207.83. Recent price cuts also took a toll with Tesla, saying vehicles sold for less on average in the fourth quarter than they had the year prior. Its operating margin improved slightly quarter over quarter to 8.2% for the final 3 months of the year. Still, that figure was down from 16% in the fourth quarter of 2022. Tesla's valuation has long been underpinned by its sales momentum and Musk's promise to transform the car maker into a leader in robotics and artificial intelligence. But his comments last week demanding more control of Tesla injected some uncertainty around its commitment to the electric car company. Tesla has also confronted other challenges in recent weeks. Hertz disclosed this month that it was selling off about one-third of its EV fleet, and Chinese automaker BYD overtook Tesla in the fourth quarter to become the world's top seller of EVs for the first time. Musk on Wednesday's earnings call praised Chinese automakers. If there are not trade barriers established, they will pretty much demolish other car companies in the world, he said. Earlier this month, Tesla initiated new price cuts in China and Europe and said it planned to suspend nearly all production in Germany for 2 weeks beginning in late January because of parts shortage caused by the conflict in the Red Sea. Tesla makes its Model Y crossover outside of Berlin. The gathering headwinds fall against the backdrop of waning enthusiasm for EVs. Rival automakers are delaying investments and executives are striking a more cautious tone about the level of consumer demand. Buyers are also expressing reservations about going full electric. High prices for EV and concerns about charging and range continue to weigh on purchase decisions. And this is why a lot of people here in China are choosing EREVs. Hertz said it planned to sell about 20,000 EVs after confronting expensive repair costs and disappointing resale values on its fleet of battery-powered vehicles. Same for NIO here in China. The move was a reversal for a company that bet big on the technology. Hertz's commitment in 2021 to purchase 100,000 Tesla EVs helped send the electric car maker's valuation above $1 trillion for the first time. To juice sales, Tesla last year enacted a series of price cuts that have hurt profit margins. A closely watched indicator of profitability, automotive gross margin improved sequential to 17.2% in the fourth quarter, excluding regulatory credits, but that margin was down from 24.3% in the final 3 months of 2022. While the car company aims to have production costs for its next generation of vehicles, it faces cost pressures in the near term. Tesla executives didn't give much of an update on the Cybertruck other than to say the company expects to sell as many trucks as it can make in 2024. Tesla reiterated that it would take time to increase production of the futuristic pickup, which launched late last year and is the company's first new passenger model in more than 3 years. Guys, if you recall, Tesla was the one that started this price war in early 2023. In January 2023, they initiated price cuts, followed suit by XPeng and everybody else doing price cuts to counteract the surge in demand for Teslas due to those price cuts. And this shows that they have really taken a toll as well. They are not immune to these price cuts that they've initiated, and it continues to go on. And throughout the entire EV industry here in China, everybody is doing price cut. Now, how does this affect NIO? Well, NIO is very price sensitive. Their cars are quite expensive, and obviously with them, if they did big price cuts, it would really help sales, but they do not have the opportunity, the luxury to do price cuts apart from inventory cars and showroom cars that have been in the store for a very long period of time. Now, in June of 2023, NIO did do a sort of like a price cut, semi-price cut, where they removed the free battery swap and lowered the price, saying that the free battery swap was worth X amount of money, 30,000 RMB, and throughout that, they were able to cut prices. But it seems like they might have to do further price cuts. Now, what's really interesting was the fact that CEO Elon Musk said Chinese car companies will crush, absolutely demolish automakers here in China if it wasn't for these trade barriers and all these kind of protectionism from the West. And this is absolutely the case. Chinese EVs are just so fantastically built well, and so good that the only way that Tesla can try to continuously have good deliveries and not lose market share is by doing price cuts. This also means that as long as the geopolitical situation maintains its current status, it means that Chinese companies will continuously be sort of limited to growth in China. And I'm sure companies like BYD would love to expand to the US. They are expanding in Europe. They would love to expand to the US, but it's just not exactly possible. And the EV price war is purposefully skewed to benefit foreign automakers like Tesla, even here in China, because of the protectionism. And even though they're doing price cuts, Tesla is also taking a heavy toll. Like NIO CEO said yesterday on stage, why don't companies first compete in terms of features and benefits and all sorts of service, try to have the best service, try to have the best technology instead of having the cheapest car, instead of just cutting prices. They should focus on those first. And this is some of the frustration that NIO CEO wanted to express. I am sure that if NIO was available in the US, a lot of you guys would actually be choosing NIO over a Tesla. But unfortunately, protectionism of the West strangles Chinese companies just like that. Protectionism prevents Tesla from being demolished by those Chinese EV makers. So guys, beware of slower growth overall in 2024, not just for Tesla, but also for NIO. But NIO has the sub-brand coming out, so that will actually help growth tremendously, okay? But also know the fact that NIO's and other Chinese automakers are excellent, but U.S. protectionism, is really hampering things down and just pushing us down quite a lot.